You're listening to the Applied Blockchain podcast, hosted by Ben-Ari, founder and CEO of Applied Blockchain. Join him as he sits down with global experts to uncover how blockchain is driving real-world impact. Today's guest is Clarisse Hagège, CEO and founder of Dfns, the crypto wallet infrastructure firm now collaborating with IBM on the new enterprise-grade platform, IBM Digital Asset Haven.
Hi, Clarisse. Welcome to the Applied Blockchain podcast.
Thank you very much for having me.
Okay, it's a pleasure. Right, Clarisse, for our listeners, can you maybe give us a bit of an introduction, tell us a bit about yourself,
Sure.
how you got into all of this crazy world?
Sure, of course. Well, I come from a finance background, right? So I spent about 10 years in banking. And during that time, I got to understand blockchain technology to actually work on efficiency for trade finance. At the time, I was a structuring product in export, working in export and trade finance. And so we were looking at all the inefficiencies that come along, sending LOCs from one place to another. And so we looked at blockchain technology and thought that there was some potential to make it more efficient. That was 2013. At the time, there was a very big divide between crypto and the tech itself. And so this is pretty much when I started getting interested in the tech. And very much followed, everything that was going on since then. Then 2015, I actually had one of my friends that came to me with an idea that I think is very interesting, and I think it's the perfect timing to start it now, but we were 10 years early, which was the idea to create a food coin, so pretty much an app, a remittance application for food payment, right? And so the idea was to do that between the US and Mexico, leveraging stablecoin and
For food?
Food coin, yes. So pretty much I would say the problem that he found was that money was being sent back to their family, but not for the right usage, right? They were used to gamble, used to buy other stuff. And so the idea was to enable through this application a way to only spend the remittance money on food purchases. Anyway, I think it was very good. But at the time, back 2015, 16, smart contracts were barely out. It was hard to build anything. And so after a year and a half of trying to get this thing started, we decided to put it aside. And I never quit my job for it. But so that's really, I would say, the moment where I became completely convinced that the entire finance industry will run on chain, and that it was a matter of when, not if, but a matter of when. And long story short, back in 2019, I decided to resign to launch Dfns because I think what was important to me was to make sure that the infrastructure was in place to start building applications, right? And in my opinion, what was the state of custody technology back in 2019 was not fit to allow players to start building. It was very much dashboard first solution that were designed for the buy side market that wanted to do crypto trading.
Clarisse, can I just ask you there, just before we move on to what you did, on the trade finance? I'm curious about this because it's also, I guess we have some parallels in our story because I was also at a bank and then got dragged into some trade finance use cases. And then I know that there were some, there's some quite high-profile projects that kicked off probably around 2017, 18, maybe a bit earlier, and most of those didn't really survive today, right? Yeah. What's your view on these?
It's still my the realization on trade finance is that we've seen startup starting developing platforms to optimize the process. When they launched with blockchain technology, only to realize that they were the third-party trust provider. And so the blockchain technology was almost adding complexity to the overall workflow, because the banks were not equipped to handle it. And so And so they came to the market, and I'm thinking about 2-3 players now. They came to the market with platforms that became widely adopted, that did improve massively the way you handle trade finance, but they all dropped the blockchain component. I think it's super interesting. It's a super interesting subject because, in my opinion, there's several use cases like that where there's the chicken and the egg issue, right? If the infrastructure is not in place, then you might have a better solution leveraging blockchain, but it's impossible to adopt for the players that don't have a wise infrastructure, do not know how to manage this technology, and so absolutely, in my opinion, trade finance is a very good example of a place where we still think, or I still think, that blockchain could be could be a major improvement. But those players, they were very quick into creating a network effect that is right now, really making difficult the decision to switch to blockchain, because once again they are the third party trust provider. So until they mess up, pretty much, I think no one will want to reinvest money into adopting new technology in this specific.
Okay. Do you think that the type of blockchain technology they used, because I think most of the ones I'm aware of were private blockchains as opposed to public blockchains, do you think that's a factor, or it's not related?
I think at the time it was not related, not a factor, right? And you're right. I think one of the players I'm thinking about was leveraging R3, and so yes, you're right. They were leveraging private blockchains because at the time it was very difficult to anyway have a banks leverage any other type of technology. It's a good question. I think really at the time it was more of a infrastructure question. People once in innovation team in the banks were very scarce, trying to push one subject, and so the trade finance division were not very much under the spotlight, right, for this type of exercise. So I think it's more of an infrastructure issue. You see initiatives like, I think it's a city that has done something that is quite large at scale within their bank, leveraging blockchain, still private blockchain, but for the trade finance capabilities, and has improved internally their process. I do believe we'll see new solution, and especially, and we're going to talk about that, but if you at the end settle this transaction on stable coins, you're going to see even more leverage and even more incentive to actually make sure that the documentation is also on chain, and that it follows the same type of route. So I do believe that it will come back. But at the time, less of an issue of private versus public. I think it was just an issue of understanding and availability of the infrastructure to manage such technology.
Yeah. Okay. Interesting. I guess my thought on this, my angle on this is that with the private blockchain model, every party in that trade finance process or life cycle, if they want to keep commercial privacy, they basically have to host a node.
Yeah.
And so part of that infrastructure you're talking about is really requiring all these parties to host a part of this solution.
Yeah.
Whereas now I think there's alternatives to that. I think you can have solutions where you don't give a central party control, like full control. So you're not creating a new intermediary, and at the same time you're not forcing every player in the chain to start to host nodes and infrastructure.
Yeah, so what you're saying is that there was an entry, a barrier entry that was quite high there.
Correct. It's not the only problem, but I think it's one of the points of friction that would have slowed these things down.
Yeah.
Okay, so then it's still quite a big jump from that world to custody.
Custody, yeah. No, then I think I skipped a bit some step of the story, but I would say the big realization was that during that summer in 2019, I helped a startup that was incubated by the bank I was working for. I helped them raise private ICO. And what was interesting to me was to see institutional investors see if they were ready to buy. And to my surprise at the time, they were actually quite interested. But once again, the infrastructure was terrifying to them. They're like, okay, so either I need to pay 70 basis points over whatever I'm going to buy out of these tokens and onboard with a custodian that I don't know, that is not even based in my jurisdiction, or you tell me that the alternative is to enable my traders to have nano ledgers in their pockets and have them pretty much live with with our funds. So I think in order to make those sales successful, I really dived into what was the state of custody tech. And as I told you, because I was very much convinced that for cash management, for cross-border payment, for tokenization on the debt capital market, equity capital market, for securitization, where we actually do see very interesting initiatives these days in Brazil at scale on securitization for auto loans, for consumer loans, which once again, securitization is another place in the bank that is highly inefficient in terms of operations. I really thought that blockchain was a painkiller. I see it, as pretty much an extremely powerful database, right? It's a super powered database that enable the finance industry to just be more efficient, right? And to have huge gains in terms of capital efficiencies as well. So because I was convinced that every single division within a bank will run on chain. Whether we're going to talk about private, public, this is another matter, but that the technology itself was too important, but also resourceful to not be adopted. What was interesting to me is that I didn't find any solution that was easy enough for those players to integrate and build on top of a wallet infrastructure. And in my opinion, it's a big, build versus buy. At some point, if you want the technology to be adopted, right, you cannot have to reinvent the wheel every time you're starting one application, right? You need to leverage technology that are out of the box and that enable you to save that time. And so this is how I resigned to build Dfns, which is very much an API first solution that can be implemented.
Did you, just out of curiosity, did you join forces with with that startup, or you kind of ended up doing your own?
Which one?
The one that was incubated,
No, I didn't join forces. We had talks about it, but no, I didn't. I think what was interesting to me was really that custody piece. They were solving another issue. It was we can talk about that. It's also very close to the custody piece, which is the blockchain name service, right? So they were solving the public key issue, which is to this day, I think it's going to become a place where we're going to see more spotlight on in the coming years. I think up until now it was more of a we do have IBANs, we do have already addresses that are not so readable, and so also if we're using if you want to add some privacy, I'm not going to put my name on my public key. So there was a lot of conflicting issues around blockchain name service. I do believe that there's going to be a conversion between KYB, blockchain name service, and that they are going to be more and more actually wallet providers and infrastructure providers that will want to start providing new solutions around BNS in the coming years. So I do believe that it's still interesting, but at the time I don't know that it was such a big problem, right? In 2019.
Okay, that's interesting as well, because if you associate addresses with KYB, I guess there's still like a privacy angle there as well, isn't there? Right?
Yeah, you can have some. It can be anonymous. I think another thing is that it's as a wallet provider, we forge the private key. We also forge the public key, so you can enable as well to provide some origin as of the security, how it was, generated, what was the technology used, and so for all KYT as well transaction, it also enables to add some readability on that data. So I do believe that these are very interesting subjects. I would love to spend a bit more time on them, but yes, I believe we'll be also investing quite a bit in the next years on that topic.
So Clarisse, you make this huge jump,
right,
of leaving a big organization and just going with this crazy idea. Okay, so what did that look like? I mean, what was that like in practice?
Oh, okay. If you want to get into the details, it really seemed like a crazy idea at the time. So first, so I think when I did decide to launch Dfns, to me it was a safe bet in the sense that it was a very emerging technology, which once again I was convinced had a future. It was a very easy subject to comprehend, and once again the custody piece is kind of, it's pick and shovels, right? You start there.
Yeah.
So not venturing into area that was within our new technology so crazy. So I was quite comfortable in launching that initiative. I think what was surprising, right, and what came more as a discovery over the past month is that COVID hit, and I had to build a team in a world that was completely different than the world I had known, where you didn't meet people in person. So you had to start, getting to know your co-founders through just Zooms and trusting them through Zooms. So there was this, the world changed pretty much at the same time. Personally, also, I became pregnant literally the week after I resigned, which was like, okay.
Oh wow! Oh my goodness! Wow.
So it was quite. So just to come back to that moment, it was.
So it was like a double incubation.
It was double incubation. But what was interesting about the COVID part is though, once again, it was a brand new world that you had to adapt to in terms of trust and how you build relationship. The world also slowed down, right? And to me, it was the perfect timing to, deep dive around the tech that we were leveraging, reading books about cryptography, and it did, gave that longer time of incubation somehow. But yeah, so that was definitely quite a change. But I was lucky enough as well to have my partner who joined me on this project, and he's a serial entrepreneur, so he helped me also move way faster than I think I would have done myself, just because once again, and that Adi, the beginnings are just always more surprising than you think they should be.
Not just the beginnings.
Not just the beginnings, it's every single step of the way. But I really do believe that very first part, the 0 to 1, is until you've done it, until you know exactly how to get there, right, is even more challenging than the others. You're right, then there's challenges along the way.
It's interesting, there's a couple of things there. One is you said to you it didn't feel like a risk, it was obvious that this is where things are going, right? I think that's super interesting, right? Because you probably find that, I think with most entrepreneurs it's that's how it feels, right? I'm not really making a bet, this is where it's going, right? But I guess the other side of that could be, you could be right, this is where it's going, but who's to say, but it might not be your solution, right? I guess this is what,
100%. Then pretty much the jumping for the idea was easy. Then you're right, execution is everything. I mean, the idea is the idea, the timing is super important, but that's not how you build a company, right? Execution is
and then the other thought I had was just about your co-founder. So that's interesting. Like the fact that they were a serial entrepreneur, I think that must bring a ton of sort of real world lessons learned and knowing what to do first time, that kind of thing. What was their background?
So my co-founder is my husband. So it's a family.
So the double incubation was
exactly
all together.
We made it a family business. But he previously had all his life he had started company, and previously it was in HR tech, so completely different area. But I think, and that's also the beauty about our space. I think hearing me every night talking about blockchain and how it was going to change the way we do any sort of financial exchange globally, he became very much convinced very fast, and I think it's addictive, right? Especially this industry. Once you start really understanding, the potential of what you're building, it becomes just so addictive. So for him, it was very, I didn't have to convince him pretty much. He really became completely sold on the promise of not only what we were doing, but also the tech. So switching from one subject to another was not hard, because once you have that, you have the curiosity, you're just diving in. And honestly, in 2020, there was very few blockchain experts. That's the truth, right? Yeah. Every year, and still this year, I would say there's still very few. And
I would argue there's still not that many.
Exactly. So it was not also that frightening to start a new subject, because yes, there were a lot of people more knowledgeable than us, but we also knew that the learning curve was going to be fast, right? And that we could catch up that gap of those 5, 8, 10 years that we had missed. So that was his background, mostly HR tech. And I think the first time, like pretty much he came in 6 months after I started working on the project, and the first thing he did was challenging me on the co-founder I had picked, which were very good on paper, but once again, no founder material, not driven enough. We're not really hadn't started building because I hadn't fundraised, and they were waiting for the money to start building, which was a red flag, etc., etc., etc. So those things, I mean, he had been in the past. He had, as a normal entrepreneur, had a lot of issues with co-founders. So knowing who to pick, how to build that association as well from a legal standpoint. What do you give first? What do you give after 2 years, and how you structure these partnerships so you make sure that everyone is incentivized in the same direction. It was this was super important, and I think to this day most of the startup fails because of that issue, right? Because of the co-founder team or the co-founding team is splitting or not aligned towards the same direction.
Yeah, it's very difficult.
Yeah, and so for us to make sure that there would be no issue, and we would keep the ties very strong. We made a second kit to really de-incentivize.
Right. That's so funny. I've just got these funny thoughts going through my head. Like, are your kids? Is it aligned with the funding rounds? Like, is it...
Actually, this is a very good point. I was like, there's no way we're making the second until we've
secured. It's
So,
part of the business plan, right?
Exactly. So the first one came during the pre-seed, and the second one was conceived after the seed round. So I knew 2 years in front of us.
Brilliant. Wow. Okay, fantastic. And now I'm thinking, are there names tied to like versions of the product, or you can go, you can see where you can take this.
We didn't go that far. We didn't go that far.
I'm thinking like the Ethereum names every time they bring out the release.
Yeah.
Okay, good. So, what do you think, Clarisse? What do you think gave you the edge in this market? I mean, you came in, and what's giving you the edge?
I think it's also what was what slow us down also in the beginning is, once again, we built for a market that was slowly building. We didn't build a dashboard for solution for the market that was existing, which was crypto trading. That was the mature use case back in 2019, 2020, when Bitcoin went from 5K to 45K almost overnight. This was what everyone wanted, right? VCs, asset managers, they wanted a dashboard to interact with, and we were building APIs. So at the time, we had, for the first 2 years, it was a lot about building anyway and not selling. But then when we started going to market, most of the use cases that were builder use cases were, NFT use cases. There was a lot around loyalty program, NFT use cases, ticketing, etc. So we started seeing players building on our product, and builders that were not the segment we had built for originally, because once again, coming from the finance industry, what we had in mind was more building for financial use cases. Even though our first client to this day is still alive, is Nilos, who's a cross-border payment provider. So we already had players leveraging stable coins very early on, but that was the exception. That was not where the hype was. So why am I telling you that is what is making us unique in this market today is that for the past 5 years we actually worked on APIs, and it was also what was slowing down our adoption curve for the first 3 years because people were more leveraging crypto trading use case more than actually building financial infrastructure. And so when pretty much there was a lot of going back and forth, or I would say 1 step forward, 2 step backwards on capital markets, looking at tokenization. But once again, chicken and egg issue. Clients really don't care about tokenizing bonds. Issuers could if it brings ridiculous efficiencies, but until you settle on chain, until the KYC is not embedded in your smart contract, until XYZ, you don't see the efficiencies. So those use cases were very much POCs that we're not focusing on. We've been always very much worried about POCs not enabling us to build a good product. So we really, focused where the market was. So when people were building NFTs, we were actually enabling them to build NFT platforms. We had a few games at the time. And then when the crisis hit after FTX, we really refocused all our strength into building for the financial roadmap, which was always very much our goal. And we accelerated that path. And I would say the 2 catalysts has been last year, both the election of Trump, but also Stripe acquiring Bridge, right? I think that was the 2 market validation that we have. So 1 market validation plus the catalyst to bring the US markets on chain, literally, or to bring the US markets to the party was what really accelerated our growth. So pretty much since last year, you have a market that's built, that has understood that first use cases that are going to scale is cash use cases, where you're leveraging stablecoin, tokenized money markets, repos, and where you actually see efficiencies and revenue opportunity right away. And so today, this is, I would say, 60-70% of the volume we're do on our platform. In terms of transaction every month, we do over 2 billion, and 60-70% is powered by stable coins. So we've been really, we've been well positioned to grow with these use cases, which were once again what we've designed Dfns for.
Yeah, and your clients, are they exchanges? Are they banks? Are they hedge funds? Are they all of the above? What is?
Yeah, it's a good question. Today, we cater for mostly 4 use cases, and we really focus on 2. The first one is custody use case, and there it's going to be any regulated VASP bank that is building custody solutions. So going from the Zodiac custody of this world to large CSDs that are also building custody capabilities within their infrastructure to neobanks. We work with players like The Blocks and others. So that's going to be very much of a custody use case, custody treasury management. This is the one that is scaling the fastest, and will announce, very large institutions and interesting partnership by the end of the year that will enable us to gain quite an interesting market share in this segment. Mm-hmm. The second one is payment. On the payment use cases, we work mostly with PSPs. I would say there's 3 sub-use cases, obviously cross-border payment, remittance, but also global payroll. There's several trends. You see mostly the large cross-border platform like the Bridge, who got acquired by Stripe, the Iron, who got acquired by MoonPay, and others that had started building with Dfns. And then after, you see the new players, which are the traditional players coming to the market, so the large cross-border provider as well. And so those are, I would say, our 2 legs, and what we're focusing on both commercially and in terms of roadmap. After that, we also serve the tokenization use case. The 2-3 trends that we see there, it's mostly money markets. So we are behind Spyco, behind Midas, behind other money market tokenization platform. We're behind capital market tokenization platforms. So Tokeny, we got acquired by Apex, Nomics, Real Asset, AssetBox, all these guys. Yep. And last, obviously, stablecoin issuance. So whether we talk about Circle or Agent, we're going to be leveraging our platform on that part as well. And last, once again, as I told you, we came to crypto trading sort of at last as our product scaled and as our APIs became more programmatic. We open up to more crypto trading use cases, and that's going to be mostly exchange and OTC brokers that are looking for programmatic usage of our platform. So yeah, so that's pretty much the scope.
Okay. Very good. And with going back to that conviction that you had at the beginning of like, this is obvious and it's going to play out. Where's this going? What's next?
Yes. No, honestly, I always say the first 3 years were, you convinced, but I also, that's one of the things I didn't get right, is that back in 2020, I was convinced about the time to market. I thought time to market was now. And when Bitcoin went from 5 to 30, I was like, this is it, right? This is now, and it's happening. And then once again, FTX collapsed, and not just FTX, all the collapse that happened that year, which pretty much set us back 2-3 years back, right? So the first 3 years have been challenging, right? Being too early in your markets, then after seeing the demand and traditional players for whom we had built our product not coming to the table, being afraid about the industry, regulators starting pretty much enforcing without ruling. This environment was very much challenging, and what I always say is that it's been incredibly fun working for the past 2 years or a year and a half, right? Because finally you see people building, right? And we're very much a tool behind the curtains, right? Where when we see that we bring value is when all those applications are live and in production. When we saw the first when we started powering Bridge and we saw the volume jumping from one month to another, at a pace that we had a hard time to believe, we were so excited, right? Because that's exactly, we're an enabler. And so we want our clients to be successful. We need our clients to be successful, and we want to start spreading this type of use cases. So today it's more than ever obvious there's no coming back. So it's still I'm even more optimistic than I was back 5 years ago. I think there's going to be not all the use cases will advance at the same path. I think what we're seeing as well since the past few months is not all the regions will advance globally will advance at the same path. I think we're all very much convinced in Europe that 2 years ago we're like, oh, amazing, for once we're going to be ahead of a revolution. This is it. We've lost. Face it. It's game over. And it took 6 months to the US for the US to catch up, right? Literally in 6 months. And these gaps that are so huge that are going to be very, very hard to bridge. You see, we're starting seeing also the APAC markets really moving up as well on the institutions, and it had always been a market that was quite vibrant at the startup level, startup scale-up, exchange, crypto trading level. But now we're seeing institutions in, Thailand, Vietnam, Indonesia really start getting on the stablecoin use case.
I was going to ask you about that actually, the kind of geopolitics. Let's say which markets you serve and how you see that. Yeah.
So I would have until a year and a half ago, Europe was very much a safe haven where we had quite a bit of growth, and most of our clients were Europeans. And now it's not at all the case. The market where we see the most opportunities, where we have the most activities, the US, LATAM. We're opening Asia because we had a lot of inbound. So we're going to have our head of APAC officially joining in September. And there we see a lot of opportunities.
And where in Asia would you set up? Or where would you focus?
Good question as well. Hong Kong. So we're starting in Hong Kong and not Singapore, because we've seen regulators tighten up over the past month, because it's a very small market and most of our competition is already there. And we think that it's an easier way to, from Hong Kong nurture. And we see a lot of a lot of banks, neobanks in Hong Kong opening up to the subject. We want to serve, obviously, the Southeast market because it's on the stablecoin side, it's just huge, the possibility. So once again, Indonesia, Philippines, Thailand, Vietnam we think that what we can do is big. So if our opening works well, this is pretty much where we'll double down.
Okay.
Very, very excited about that. We had our first major wins as well in UAE. So we're going to be securing the Abu Dhabi stablecoin. We're very proud about that. And this is opening quite a bit of doors in the region. So we see as well it's a different market, but we see it being quite dynamic, and mostly we see a change on the institutional side. Once again, we're less of a crypto trading market, has always been vibrant on that front, but now we see banks really seriously addressing the technology. So everything but Europe, really.
Okay. well.
Oh, exactly. It's well. I'm exaggerating.
Yeah. Okay. I think it's interesting to hear this from your angle because we can see the headlines, we can see the Stripe bridge, etc. But you don't know what's actually happening.
Yeah.
Right. And then from your side, well, they're obviously installing the infrastructure.
We see early on.
and using it, so you can see they're actually using it, right?
Yeah.
And you can see they're actually buying it, and so this activity is actually happening.
Yeah, listen,
right?
We're not the largest player in the world still. Having said that, from Q1 to Q2, we've multiplied by 20 the number of RFPs we've received and we answered. So
wow.
just an idea of, and this is, once again, this is traditional finance, right? And so there's been such a FOMO.
Yeah, no, I mean, there was one, I won't mention names, but there was a US bank. I was talking to someone from the bank, and leading up to the elections, it had been, shutting down. And then the day after the election, it was straight from the top. What are we doing with this? What are we doing with that? What are we doing here?
Yeah.
A complete U-turn. Yeah.
No, there's not. I don't think there's a board of a regional bank in the US that wasn't called this summer to discuss what do we do, right? Do we accept? Do we issue? What's our strategy, right? No, the US market is going to, which is also very interesting because they've had on the payment side a technology that has been following mostly more than leading, right, up until now. So FedNow has been now up and running for a few years, but SEPA was a much better network up until 2020, 2021, right? So it hasn't been a market that has been leading on the payment side, but I do believe that now that revolution they will definitely lead on the stablecoin side.
Yeah. Okay. Interesting space to watch.
For sure.
Good. Clarisse, before we go, I usually ask people, guests, if they have any sort of anything to recommend in terms of sources of information. It doesn't necessarily have to be about this market, right?
Yeah.
Just be like great books you've read or things you've listened to or that kind of thing. Have you got?
Yeah.
Yeah.
So I always say I'm very careful with my LinkedIn feed and the way I nurture it because it's an incredible source of information. It's a bubble. It feels like the world is doing blockchain when it's really not, but it's still super interesting. Apart from that, just to stay on blockchain for a second, if you're interested in cross-border payment and if you want to see how fast the adoption is going, I love Daniel Weber newsletter and any content he published from FX Now. It's just brilliant, very in depth, and so this is a great way. It's funny because I've been following that for a while, and up until a year ago, crypto stablecoin didn't make more than one newsletter every 6 months, right? Now,
Right.
literally every week you have something around stablecoin and stablecoin adoption, right? So this is super interesting. I like, for, I would say, mostly for entrepreneur guidance, more than theoretical books. I like biographies, so I tend to read biographies of entrepreneurs, whether we're talking about very old stories or contemporary stories. I find them always very inspiring. So I think
Is it like, I don't know, Silicon Valley ones, or not necessarily?
it could be Silicon Valley, but for instance, one that I like these days is actually not at all on the Silicon Valley. Is the founder of one of the largest cosmetic brands back in early 20th century. And so so I do believe that these are always great source of inspiration on how you build,
Yeah.
how you maintain, and how you build for the long term, right? So I think this is always very interesting. And then I do listen to podcasts. I have a few newsletters that are making my days. But that's pretty much my recipe.
Yeah. Okay. Amazing. Clarisse, it's been great. Thank you very much for sharing your story with us and
Thank you so much.
and giving us your time. And I think that also probably like most of the guests we have on here, because it feels like we're just like in this moment in time and everything changes so quickly, it would be great to catch up at some point in the future and kind of see where we are.
Anytime.
Yeah. Okay, great. Thank you very much.
Talk to you soon.
Thanks for tuning in. Catch every episode wherever you get your podcasts. Follow Applied Blockchain on socials for the latest insights and explore our layer 2, Silent Data, at silentdata.com.